Hi, this is Keith Shabbat, your friend in the mortgage business, and today we're discussing USDA loan types. The rules governing Section 502 loan origination differ slightly depending upon the type of loans being made. The types of loans available under Section 502 include initial loans, assumed loans, subsequent loans, and non-program loans. This section describes the four types of loans and how they differ. Initial loans are made when neither the applicant nor the seller have an existing agency loan. Generally, they are made for the maximum loan term of which the applicant qualifies and at the Rural Housing 502 low or moderate interest rate. If no prior agency loans are involved in the transaction and the loan is to be made on the program terms, this is the type of loan used. Section 502 loans may be assumed. The terms of the conditions of the assumption depend upon the eligibility of the new purchaser. Most assumptions of Section 502 loans are new rates and terms assumptions. That is, the purchaser assumes the responsibility for all or a portion of the remaining debt, including principal and recapture receivable amounts. In order to conserve the agency's budgetary resources, the transaction does not involve paying off the old loan and issuing a new initial loan. Instead, the purchaser assumes the outstanding debt, which is reamortized at new rates and terms. If the new purchaser and the property are eligible for the Section 502 program, the loan can be assumed on the program terms. In addition, eligible new purchasers may receive subsequent loans to make up for the difference between the amount of the debt assumed and the purchase price, or may be able to obtain leveraged loans. If the property does not meet agency standards or will not be bought to agency standards with the use of the new loan, or the new purchaser is not eligible, the loan can be assumed on a non-program term. Purchasers who assume the loan under non-program terms are not eligible for loans to cover amounts above the assumed loan amount. In certain limited cases, generally those involving transfers of title between family members, a same rate term assumption is permitted. Under this type of assumption, the existing note terms, including the interest rate and the remaining repayment period, do not change. The new owner need not income eligible for the Section 502 loan. However, payment subsidy can be continued for new owners only if they are eligible for the subsidy and only at the level at which the new household qualifies. Same rates and term assumptions are permitted for the following types of transfers: a transfer from borrower to spouse or children not resulting from the death of the borrower, a transfer to the relative, joint tenant, or tenant by the entirety resulting from the death of the borrower, a transfer to the spouse or ex-spouse resulting from a divorce decree, legal separation agreement, or property settlement agreement, a transfer to a person other than a deceased borrower's spouse who wishes to assume the loan for the benefit of the persons who were dependent on the borrower at the time of death, if the dwelling will be occupied by one or more persons who were dependent on the borrower at the time of death and there is a reasonable prospect of repayment, or a transfer into inter vivos trust at which the borrower does not transfer rights of occupancy in the property. Subsequent loans can be issued as part of an original purchase of the property in combination with an assumption or during the term of an agency loan to help an existing borrower pay the repairs and improvements to the property. A non-program loan are loans made by non-program terms to borrowers who are non-program eligible and/or for properties that do not meet agency standards and will not be brought to agency standards with the use of loan funds. The interest rate offered on somewhat higher loans like these are eligible for borrowers but are competitive in the marketplace. Borrowers with non-program loans are not eligible for program benefits such as payment subsidy or for servicing action such as moratoriums. They also are exempt from occupancy restrictions and requirement to refinance with the private credit. When existing agency borrower wishes to sell a security property, the agency will assist the borrower by allowing a creditworthy purchaser to assume all or a portion of the outstanding debt at new rates and terms. If the purchaser does not qualify for the assistance under the Section 502 program, the loan may be assumed by a non-program term. Non-program purchasers acquiring a property from an agency borrower are only permitted to assume existing debt. New credit can not be extended to them through subsequent loan. The agency may offer credit for the purchaser of an REO property on non-program terms to borrowers who are not program eligible and or for properties that are not program eligible as well. This is Keith Shabbat, your friend in the mortgage business. Thanks again.